today. I'm Dr. Boyce Watkins from Your Black World and the Black Business School. I'm going to give everybody a chance to come into the conversation as we break down what's going on in financial markets. I hope that everybody is investing. If you're not investing, I think that you should invest. We actually in the Black Business School want to have 1 million people in our community invested by the end of the year 2020. That is our answer for racism is wealth. Because when you're rich, it's hard for people to oppress you. And so if you want to understand how stock market investing is the key, the difference maker when it comes to wealth in America and around the world, then feel free to go to blackmoney100.com. That's blackmoney100.com. There's a free training at that link on how to invest in the stock market. That will get you started. That'll show you how to buy your first share of stock. And then also, of course, every Tuesday night, I have a masterclass that meets for the next 6 weeks. It's at drboycemasterclass.com. That's drboycemasterclass.com. So anyway, let me go ahead and tell you guys about what's going on in the market. I every now and then I'll give you guys market updates on the Black Financial Channel, which is theblackfinancialchannel.com. That's a YouTube channel where we talk about black wealth and market reports, market updates. Pretty much every day of the week. We're doing content several times a day. So anyway, here's what's going on. Okay, so the stock market this morning, as of August 1st, has actually risen by about 300 points after taking a big nosedive yesterday. I think yesterday was the the worst day in 2 months. And it was fascinating that yesterday was the worst day in 2 months because actually the the chairman of the Federal Reserve, Jerome Powell, actually announced a rate cut. Typically, when a rate cut is announced, you expect a bump up in stock prices. And these are among the subtleties that I talk to my students about in the Black Stock Market program. Because, a lot of times you think that, in terms of market dynamics, that a rate cut is going to lead to a market, price jump. But actually, it's about expectations. So what had happened was the market expected a rate cut. They were expecting that the Fed was going to reduce the federal funds rate by about 1/4 of a point. To 1/2 point. They had a 50% chance it would be 1/4 of a point, a 25% chance it would be 1/2 a point. And so they had already adjusted prices with the expectation that the rate was going to be dropped by 1/4 point. So the Fed chairman, Jerome Powell, goes out with a very carefully worded statement, and he says, we're going to drop the rate by 1/4 point. No problem, right? You expect maybe a little bit of a price increase in stocks. At the very least, you didn't expect a dip. Well, where did the dip come from? Well, the dip came from the fact that not only did Powell reduce interest rates, but he actually came back and said, don't expect this to happen anymore. So it's almost like somebody giving you, you're expecting your dad to loan you money whenever you have a financial problem, and your dad, but your dad says, here's $500. Don't ask me for any more money for another year. Then you're like, whoa, wait, hold on, Dad, wait, that ain't right. And so basically the market had expected that Powell and the Fed would continue to reduce interest rates. And when they basically communicated that this is a one-off kind of situation, it caused all kinds of market chaos because the words that come out of the mouth of the Federal Reserve chairman are like gold. They really are. That old commercial. Remember that commercial, E.F. Hutton? When E.F. Hutton talks, people listen. When the Fed chair talks, people listen. So literally, they have very carefully worded speeches that they read to make sure that there's not one word that's misinterpreted, one hair out of place in the whole situation. So basically, a hair came out of place. Now the Fed tried to actually, I think, if I'm not mistaken, he came back and tried to clean it up later, and the market recovered a little. But many of you who are invested probably saw a drop in your portfolio, at least if you're properly diversified. Well, today the market went up 300 points, right? And I was like, oh, it went up 300 points. I looked at my stocks. I said, okay, it looks like I made some money. Okay, this money's always a good thing. But then I was like, well, what was going on? What was the good news that led to the market increase? Well, it wasn't good news that actually led to the increase in market prices. It was actually bad news that did it, right? And you would say, well, how can bad news increase stock prices? Well, the reason that the bad news increased stock prices is because the manufacturing data was released. I get on the manufacturing sector, indicating that the economy is starting to get sick. We're starting to get a little bit of a cold in the U.S. economy, and as a result of this economic cold that's on its way, this led people to say, the economy is about to sink, which means the Fed is more likely to come in with corrective action, which means that they'll deliver that rate cut. that they said that they would never deliver, or that they insinuated that they would never deliver. So ultimately, it was the bad news that triggered the price increases, because it increased the expectation that the feds are going to come back and help out, right? So that's, again, that's like, your dad says, well, here's $500. Don't ask me for any money for another year. But then let's say that, you find, let's say the next day something bad happens. You find out that you're going to be sick and you can't work. And you know that when you can't work, your dad helps you out more. Well, suddenly you're like, oh, well, the downside is that I'm a little sick. The good side is that I think dad is going to change his opinion, because dad always takes care of me when I'm not doing well, right? Well, the Federal Reserve is kind of like dad. The Federal Reserve comes in and they do everything they can to maintain the length of the economic expansion for as long as they can. And if, in case you don't know, we are in the midst of a historically long economic expansion in America and around the world. Like, the economy has rarely, if ever, been this strong for this long. And that's why I preach the gospel to Black folks about, looking at the stock market, considering that part of your family wealth building, your family empire building strategy. Everybody's running around here worried about whether or not they think Donald Trump's a racist. I don't know if he's a racist or not. I don't really care. All I know is that he's been good for the stock market. Obama was good for the stock market. Bush was good for the stock market. Clinton was good for the stock market. And there's been a lot of money being made in the stock market. And if you're sitting around worried about whether or not Trump's a racist, then you might have your eye off the ball, and it could cause you problems long term. So, that's my 2 cents on it. I'm actually going to make this very, very short. I'm going to head on out of here. Later on drboycetv.com, I'll be doing some commentary on Quintez Cephas, who's a young Black man who's actually on trial for some weird circumstances. I'll talk about that a little bit later. Hit the thumbs up button, hit the share button. If you're on Facebook, please share this to your page. That would help us out a lot. If you're on YouTube, please hit the thumbs up button. That also helps us. Also, subscribe at theblackfinancialchannel.com. You can get these regular updates. I'll be in Los Angeles doing a one-day investment seminar, just for one day, and that's it. And after that, I'm not doing any more of these seminars for a while, because I want to take a break. But you can go to, if you want to fly in, or if you live in the area, go to drboycelosangeles.com. That's drboycelosangeles.com, and use the code word HARVEST, and you can actually get 50% off the seminar. So you can get a discount if you use the code word HARVEST. So feel free to join us there. And if you can't make it to LA, then we meet every Tuesday night, and I break down the market. If you listen to me talk to you about investing, in the classroom, and I'm answering your questions, and you do that for about 3, 4, 5 hours, you'll have an understanding of the market that far exceeds even good investors, because this is the stuff I studied nonstop for many, many years at a very, very high level, at a very high theoretical level. So I know a lot of things about the market and market dynamics that regular people don't know. Even investment advisors, I used to train financial experts. Like, that's the level that we went to in my PhD program. So you're in good hands. So I hope you'll give the Black Business School a try. At theblackbusinessschool.com, if you're looking into learning how to start a business, buy real estate, anything like that, we've got agents actually there available on the website, theblackbusinessschool.com. The agents can answer your questions. They can talk to you about what your future is. They can talk to you about your financial plans. They can help you figure out what to take. We are growing every year into a full-fledged academic institution that won't put you in debt, but will give you more expertise than 99% of all universities. So feel free to go check it out. It's theblackbusinessschool.com, theblackbusinessschool.com. It's built for you, by you, and it's for our community, and our community only. So anyway, I'm out of here, guys. Have a good day. Take care. It's great to see you, and I'll talk to you later. Bye-bye.